Welcome, everybody, to a new analysis of Tradomics. My name is Dario, and in this episode, we're going to have a look at the main US indexes. As usual, we're going to use the methodology T cycle analysis, which is a quantitative method that is based on the different duration of the cycles. If you have landed recently on this channel and you want to know more about our methodology, you can click on the pop-up banner on the right-hand side, Introduction to the T cycle analysis. Why should you follow this method rather than the classical technical analysis of wave analysis? Because in this methodology here, you have all the different duration of the cycles, and you are able at any point in time of the chart to predict the future direction of the price by using a statistical methodology based on time, and you can foresee how long the price can keep rising or falling, and you can follow a certain pathway by having a percentage at every time or any day or any minute even about which kind of direction the price can follow. So let's start immediately with the Nasdaq 100. And as for the last analysis, what I was saying here was that we could have had the possibility either to start a retracement from this top here, or to continue in order to have more days for a monthly upward cycle. So from this top that was done on the 24th of January 2025 until this top here, we have had 17 bars. Now, if we take the total duration from the top that was done on the 16th of December 2024 until the candle that was done on the 19th of February 2025, which represented the main top. So in order to gauge the total duration, we have to go a candle back, is 41 bars. So now we can see that this T plus 2 upward cycle was not developed on the top of the 24th of January, but it was developed on the top here on the 20 February 2025, because from this top, then we had the beginning of what? A new upward cycle. And the beginning of the upward cycle are always commencing with a downtrend that is longer. It might be as long as the grade of the cycle. So the longer the cycle or the bigger the cycle, the longer we can have the downtrend to start upward cycles. Okay, so here we can remove the question mark, because we have definitely the evidence of a T plus 2 upward cycle that has just begun. Now, this downtrend was particularly harsh. And when I say harsh, I mean that in a matter of a week, we have lost, in terms of market cap, if we consider the maximum top to the minimum low, roughly 8%. Okay, and we went lower, this low that was a first checkpoint to define a T plus 2, T plus 3 downward cycle. Okay, if we now gauge the total duration from this low here that was done on the 13th of January 2025 until yesterday's candle, we have 32 bars or 32 days. This 32 days is a median duration of a monthly cycle, because we know that monthly cycle is going to encompass between 24 and 44 days. This means that we have the minimum, the sufficient condition to close the T plus 2 and start another T plus 2. But we still have time to do to have this move, plus a bounce back to the upside, or a bounce of a dead cat if you wish, and then return to test the moving average 200. Here at 200, $20,249, we have a gap up that actually is touching here the moving average 200 so far. So this might be a target, or better, this is the first target in case we gonna have by end of next week slash in the next 2 weeks a move of this kind. And this T+2 cycle has time to make this move until 44 days. So they have time to complete the cycle eventually with that move until the 17th of March 2025. Okay, so this is the first thing that we need to be aware. And this is the first key message. The second key message is that here we have the conclusion of the T+2. Yesterday we had a good reaction to the upside, at least over the short term. And now if we gauge the duration from this T+3, which is a 3-month cycle, we have 79 days. So you see that we still have time to eventually attach another bounce of a dead cat here, not just because of a duration of a T+2, but even according to a duration of a T+3. Okay, so this is a, let's say, a move that has 50% possibility to occur, because if we take the total duration so far, T+2 is 32 days, so we are exactly in the middle, almost in the middle. So by just looking at the statistics, then there's 50% possibility, something that we can see next week or by end of next week. Of course, now over the short term, we have to focus more on what is going to happen by beginning of next week. And beginning of next week is high probability to continue to the upside, because here we need at least to have a couple of candles, 2 or 3 candles that are low, higher compared to this low that was done yesterday at 20,407. And subsequently we have also to close an upward cycle, weekly upward cycle, so we need a hook to the upside. And the levels in which we can have the ending of the weekly cycle for the beginning of next week are 21,109 and 21,310, and eventually we have a 21,500, 21,500 and 21,490, 494. Okay, so this would be also in correspondent moving average to 50. Okay, so this is what we can foresee for the beginning of next week. Now, regarding more midterm setting, we have to make a couple of thoughts. So first of all, from the top that we have here at that was done on the 10th of July until the top that we have done on the 17th of December, we have 112 bars. But we have also another top that is this one. And this top occurred after 153 bars. So both this top and this top are encompassed in a cycle that is a T+4. So we cannot at the moment say whether the beginning of the T+4 has commenced here or is commencing here. So here we have all the conditions to start a T+4, but considering also the harsh retracement that we have had, I would not exclude that the T+4 can commence on the stop. Okay, we have to see over the next weeks whether we will have a bounce of a dead cat and then a return potentially to the absolute lows, or whether we will follow the pathway that we have seen so far here. So we will return back to the tops in a month, roughly in a month. For sure, given that this is a T+2, we cannot go back to this absolute top before the entire next week or the next 2 weeks. So here you have to be careful, because this level is something that we will not see by the full next week. But of course, we can start having a good bounce back to the upside. Same thing as regarding the downward cycles, because here we have from this low on the 5th of August 2024 until here a duration of 142 bars. If we gauge the total duration until this low here, we have 110 bars. So we can have the closing of a T+4 either like this or like this. Considering the experience I have on the market, I would be in favor to see what is going to happen from this low, because if here we have a T+3, we could have even a T+4, but this cycle is turned into a negative one. And therefore, if it's a negative, whatever cycle will attach from this low here, then we will see then a return to the absolute lows. Because in case this is not a T+2, but it's a T+3, then we will see a move of this kind. Okay, so we are in a situation where we can have a couple of options. What is important for next week? So the beginning of next week, this is what we can foresee. But from Wednesday, Thursday, when the weekly cycle will be completed, then we have to see the push to the downside. And if the push to the downside will go lower this low after less than 6 days, then here we will have a T+2 that will not be completed, and therefore we will have this hook to the downside with a target moving average 200. But if for the next week we will see push to the upside, then retracement, but the retracement will not go lower this low, and then we will prosecute the trend to the upside, then from here we can have a T+2, a T+3. We have all the condition to have this thing, but then you have to be careful by Wednesday, um, Tuesday, Wednesday, Thursday next week. So here we have 8 days. So in order to complete the weekly cycle, we can have another we can have a maximum of 11 days, so by Wednesday, 5th of March. Okay, so that would be the situation that we have on the Nasdaq. So Monday, Tuesday, or Monday, candle to the upside. From Tuesday onwards, let's be careful, okay, with the long positions. And as said, here is the first natural target. Okay, that's the situation we have on the Nasdaq, and let's switch to Standard & Poor's 500. In terms of upward cycles on Standard & Poor's 500, we have a slightly different situation compared to Nasdaq. The difference is that from this top here, down on the 6th of December 2024 until the top that we had on the 19th of February 2025, we have had a total duration of 47 bars. So here we had a cycle that was, let's say, longer compared to the Nasdaq, of 5 days. So from this top here until this top here, we have had not a T+2, but a T+2 hybrid, 47 days. So from this top here, now we can say that at least we have a T+2. And from this top here, we have added just a T+1, because this is a bi-weekly cycle with a total duration that was 17 days. So in the last analysis, I was saying that there was the possibility to continue the trend to the upside and then retracement. This is what happened. And rather than having the T plus 2 on this top, we have it here. And as you can see, we have had the retracement as for the Nasdaq, but also on the other indexes that started the at least a T plus 2 upward cycle. The difference also compared to the Nasdaq is that the candle of Friday, 28th of February, was higher compared to this candle. So in this case, we don't have a negative T plus 2 monthly cycle, but we have a neutral, slightly positive T plus 2. So here we are not obliged to make this let's say this move and return to the absolute lows, because this is not negative, and therefore this condition, it's something that we can have, but we are not forced to have it. Whilst on the Nasdaq, given that T plus 2, despite has reached a median duration, is negative, then we can have a situation of this kind. But here we are more on the safe side, because I kept saying since several months that the Standard & Poor's is stronger compared to Nasdaq. And you see here that this low was not lower compared to this low. Um, this low was higher compared to this low. This was higher compared to this low, and so on. So here we have a more uh, clear uptrend. Now, in terms of time, though, we have that this cycle has reached a duration of 32 days as well. So, beginning of next week will be then um, defined by another short-term uptrend, but then we will need to see after the weekly after that the weekly cycle will be completed, if this retracement will be not so strong or strong enough eventually to go lower this low. But as of today, the candle here was quite promising for the beginning of a T plus 2. But this is something that we have to check over time. So here I can start leaving the weekly cycle, and then let's see in the next months. Now the thing is that if this is a T plus 3, T plus 4, here we have not reached yet the total duration of a T plus 3, because we have 47 bars. Therefore, what we can say is a T plus 2 hybrid cycle and another T plus 2, and a return back to the absolute tops. In the meantime, here we have the first T plus 3, the second T plus 3, and this because we have already a monthly cycle that is higher compared to this low. Here we have another T plus 3. Okay, here we have another T plus 3, and this one potential is not even a T plus 3, but it's even the beginning of a T plus 4, because in terms of time here we have all the condition to close a T plus 4. Okay, so I gonna update the chart by saying this is a T plus 3 confirmed, and let's see what the information the market will give us, because we have to carefully check this move. Okay, so the checkpoint eventually for further downtrend is this low here, and also this one will be important. But if we will start by mid of next week to go higher compared to the top that we have at $6,009, then from this low here, we might have the beginning of something that is more a weekly cycle. but eventually a monthly cycle. So this checkpoint for the beginning of something which is a T+2 and further uptrend for not just the next week but next month is this level 6009. So that's the situation we have on Standard & Poor's, and then let's move to the Dow Jones. On the Dow Jones, we have a different situation compared to Standard & Poor's and compared to the Nasdaq. This is not just in terms of time regarding the upward cycle, but I'm referring to the setting itself. So here, in the last analysis, I put the T+2 as the beginning of a monthly upward cycle, and what I was expecting was more downtrend. This is because the total duration here was 37 bars, so was a little bit let's say longer in terms of a duration of a T+2 cycle compared to the other indexes, and therefore here we had less time eventually to see a hook to the upside, and therefore given that I released the analysis we were around the beginning of February. So here there were no time to continue to the upside, and that's why statistically speaking we had more possibilities to the downside, and this is exactly what happened. So analysis correct. Now I can update the chart by saying that this is a T+2, so it's a monthly upward cycle, but I can also update the stop because we have more than a monthly cycle that is lower compared to this stop. Therefore, this is not anymore a T+3, but it's a T+4. It's a 6 months cycle. We have to see whether we will stay in the next weeks or months lower compared to this top, because if this will be the case, then from this top we will have not just a T+4 but even a yearly cycle T+5. Okay, now considering the downward cycles, we have the following. So up until the Friday's candle from this low here that was done on the 10th of January, we have a 32 bars. So we are about to begin a new weekly cycle. We have had a good reaction of the price, and on Friday, the closing price was higher compared to the moving average 50, which is already a sign of strength. We have to see in the next days if we're going to proceed to the upside, and this is something that we have a high likelihood to happen, because here we have, as for the other indexes, the sufficient and necessary condition to close the T+2, and in this case we have a really positive downward cycle. Is even this low is even higher compared to the low that we have on the Standard & Poor's. If you compare the basically the delta of the price between this low and this low compared to the Standard & Poor's. So here we have definitely a lot of strength, and this T+3 has completed the first T+2. We can have the possibility to have a bounce of a red cat, then a return back to the absolute lows by 44 bars. But considering that the Dow Jones is stronger compared to the Standard & Poor's, which is stronger compared to the Nasdaq, I mean the Standard & Poor's, of course, then this possibility is quite remote. We have it more possibilities on the Nasdaq to have that situation, because that T+2, T+3 is negative, but here is definitely positive, and on top we closed over the moving average 50. So another thing that is important, this is a technicism, but I wanted to mention it as well, is that this push to the upside can be stronger compared to the other indexes, because here we don't have just to close a weekly cycle, but we have to close at least a T+1 bi-weekly cycle. Therefore, we need more time to the upside to close the upward cycle T+1. And therefore, this is why we have possibilities to go higher, not just for mid of next week, but for the entire week. Okay, because this T+2 has started definitely before compared to the other indexes. Okay, so Dow Jones is in advance compared to the others. So Standard & Poor's and Nasdaq are a little bit the laggards compared to Dow Jones, because this T+2 has started before, and on Standard & Poor's and Nasdaq it started just last week. So you see how you can compare quantitative all the indexes once you have a methodology that is able to decode the time of the different cycles, and how you can combine the cycles through the Matryoshka effect. Okay, so that's the situation I see on Dow Jones. So next week, more uptrend. Um, if we wanted to start a T+2 for the Dow Jones, our checkpoint is this top at 44,602. So if the price in the next week or in the next 2 weeks will go higher this top, then from here we will have a T+2. Okay, this one is already a sufficient one, but we are already there. But this will be the confirmation, the real confirmation. Also, this one would be enough. Okay, so this one is enough, and this one will be confirmation of the confirmation. That's all for the Dow Jones, and now we go to the last one, which is the Russell 2000. On the Russell 2000, according to the last analysis here, I was forecasting that this top could have been the beginning of a T+2, and therefore we could have had a continuation of the uptrend until a minimum duration of a T+2. We have had this absolute top here after 20 bars, but then we started a retracement. So this top now is the beginning of the T+2, and the analysis hence was not correct, because from this top here until the top here we have had 47 bars. 47 bars is an hybrid cycle, so the hybrid cycles are definitely seldom compared to the standard duration, but this is what it is. So low possibility to have a T+2 hybrid, but the analysis was not correct. This is always statistics, but we have to deal with the statistic and cope with the limitation of the statistic itself. So the stop is not a T+2, but a T+1, bi-weekly upward cycle. Now, from this top, as we have seen also on the other indexes, we have had important retracement, short-term downtrend that pushed the price even lower compared to the moving average 200. And here we have a situation similar to the Nasdaq, because we have now this T+2 that has ended its minimum time, even medium time, for its completion. We have here actually 32 bars as for the others. So as I said, for the Nasdaq, given that this is a negative cycle, we can have a bounce of a dead cat and then a return to the absolute lows. Here we have a target moving average 200 plus this checkpoint, which is at $2,199. So be careful of this situation, but we can also close this T plus 2 and start a new T plus 2. Here, compared to the Nasdaq, we have quite a lot of time that has passed to lower the stop. So this push to the upside can also allow what? Can allow the closing of the first T plus 3, because we can have a T plus 2 hybrid plus another T plus 2, or plus another T plus 1. T plus 1 is something like this. And then once the time will be enough, then we can have another T plus 3. Now, the thing is that we have to carefully monitor the tops, because given that here we have had quite an arch retracement, if we want to return back to this absolute tops, because we said that the the let's say the segmentation of the cycle that has more sense, the statistically more sense, is this one, then here we have to return to this absolute top, but we have quite a long way to go back. Okay, so we have to see whether we will start returning at least over the stop and over the stop. If we will not return back to this top and this top, here we have to review the segmentation, because from this top here we might have the beginning of a B yearly cycle, not just a T plus 5. But without going too much in detail about the previous segmentation, because it's a little bit complicated, um, next week we have more possibilities to have a bounce back to the upside, and we will have to see whether we will have a resistance around the moving average 200. This eventually, this top here and this top here, we have to be carefully monitored, especially if from this low we will have the beginning of a new cycle that is a T plus 2 or a T plus 3. In terms of total duration of this T plus 3, we averaged roughly 80 bars, 79, 80 bars. So we are at the end of even this T plus 3, but be careful, because I said also for the Nasdaq, there is time to prepare what? Prepare a bull trap for the next week. So bounce to the upside, return to the absolute lows, and then back to the highs. Okay, so we might have also this situation for next week, so be careful. And in terms of T plus 3, as I said, upward cycle, the key level is this one at 2297, and this one is at 2326. Okay, so that's the situation we have also on the Russell 2000. The Russell 2000 is the market that is weakest compared to all the other indexes. Here we have a situation in which we are closing to hit the oversold situation, at least on a daily chart. Let's monitor carefully this moving average 200 and its resistance. And here, as for the Dow Jones, this push toward the upside can be more consistent compared to Standard & Poor's and Nasdaq, because the T plus 2 also in this case was formed before the Standard & Poor's, the corresponding top of the Standard & Poor's and Nasdaq. Therefore, here we have to close a T plus 1. And in order to close a T plus 1, the hook toward the upside needs to be at least of 2-3 days. Okay, so this is why here we have to close a T plus 1. Here we have to start potentially a new T plus 2, T plus 3. So that's why here the next week we can have more push to the upside. But as always, be careful to what I've just said before. So this is the conclusion of the video. I hope it has given you lots of insights. If you want to put a like or subscribe to the channel is in order to be notified as soon as possible regarding our analysis, feel free to do so. And if you want to leave a comment or a question as well, I remind you that on my channel, we have a specialization on stocks. We follow the US indexes because it helps us to understand at which point in time also the stocks are framed. But if you're interested also on the US indexes, we have every beginning of the month an update to understand where the US markets are. Thanks for watching and see you to the next episode.